First, wishing all of us happy Dhanteras.
Yes, happy Dhanteras indeed. It's got a lot of historical significance.
Yeah.
And whatever I could read in terms of the relevance of Dhanteras, it's a time when you actually go and buy metals.
But why?
It's supposed to be a safe investment. It's supposed to be a hedge against inflation. So Dhanteras is dhan, and you essentially buy dhan, and you secure your future. Now these traditions were set years ago, right?
Yeah.
So you would actually go and buy metal, which in a sense is considered to be auspicious. It's beginning of a new year, and then metal is of course supposed to be this classic hedge against inflation. So you would buy metal largely. It could be gold, it could be silver.
Now
really
people have got on the trend of buying gold and silver.
It's the festival, I guess, of wealth, prosperity.
Now the trend is
metal.
So if you really want to buy something which could be called as a future hedge to inflation, I would say buy a SIP. And let's look at that actually. Let's look at that. It's just a coincidence that we're talking about Dhanteras and the gold returns. What have been the returns on the gold? So follow the tradition. Buy gold, buy metals, that's the tradition. But the 5-year CAGR return, and Business Channel will always say SIP and Nifty will do well. So there you go. The 5-year CAGR return in gold, 10%, Nifty, 13%. Stretch it slightly more. Can we make it a 10-year return? 10-year return, and we are looking at CAGR return, Aisha, which is what is important. Gold 10-year CAGR return is 4%, less than 5 actually, and Nifty is given a 12.5% return. And then let's look at 15-year return, and 15-year return in gold is 6.8%, and Nifty is given a 13.5% return. So what is the point I'm trying to say here? Gold used to be a hedge against inflation. Last 15 years, it has just about managed to beat inflation. It has underperformed equities by quite a margin, and then it has even managed to give you returns which are below fixed deposits, below government
fixed
debt.
income. Yeah.
So I guess time to
the answer is in front of you. It's Nifty with a near 14% return as opposed to under 7% for gold. So this Dhanteras, let SIPs be your metal.
Okay, yes indeed, it's your auspicious time then to buy into the markets via the SIP route. Alright, let's also discuss then how the markets shaped up to give you a better idea. It was a pretty range-bound day of trade, to be honest, and you had the markets ending pretty flat around the 19,395 mark. So touch and go with 19,400 for the most part of the trading day. Ended a smidge below that, absolutely quiet when it came to the broader universe as well. You had the banks in comparison that did manage to eke out a minor gain. So if we're just looking at the overall setup, you did have select banks like IndusInd Bank or even financials like ICICI, Axis that did manage to end up in the green. But the broader markets, the mid-cap and small-cap index continued to advance. But Nikunj, no surprises when it comes to that picture on the liquidity front. DIIs 18 straight sessions buying, FIIs 12 straight sessions selling.
So, technically today is the last trading day before you go for the Diwali break. Sunday it's Murat trading. Monday half the folks are going to be either out for the long weekend or they would be in Diwali mood. So technically today is the last trading day, and you can already see the festivity. In the evening when I was traveling the complex we are in, you could actually see that offices have started celebrating Diwali. You could actually
the traffic on the road told you that everyone's out and about.
Exactly. So I think you cannot judge too much into today's market action or next couple of days market action, because like we say, you're in that zone now.
Yeah.
So you're actually in that zone now. But by and large, I guess this week has been far more satisfactory for small cap index. It hit a new high. Crude prices which have plummeted, and Nifty in a sense is really following a pattern which is easy to understand, which is that 3 step forward, 1 step back. So both in terms of direction, in terms of the momentum, in terms of the global macros, whether it is yield or crude, the setting on the table I think is favoring the bulls. Also the earnings season, we've not had any major casualty. Pharma has turned around, banks are doing okay, consumer sentiment is buoyant, big companies are giving you a very positive commentary going forward. So I think it could really be a day out for the market today. Nothing significant in terms of news flow. The Nifty has done its bit already, so I think for next couple of days it may just consolidate. Sporadic news flow here or there, couple of earning reactions here or there, but I think today is just going to be just one of those days you may not get too much in terms of a direction or a momentum or in terms of a stock move.
Yeah. Yeah, we haven't been getting that for the last 2 days in any case. We've just been in quiet consolidation mode. I mean, in fact, to think of it, yesterday we did even dip below that 19,400 print and close sub that mark. But, like Nikunj is saying, that for up until next week, perhaps Wednesday, we're not going to see any much momentum or participation in the market as well, at least from the DIIs, which have been holding the ship for India equity markets. But take stock of what's been transpiring on Wall Street as well. It closed actually near the session lows, which is why you're seeing that sharp downtick on the Nifty, GIFT Nifty as well this morning. It's indicating a downtick of about almost 100 points. The Nasdaq has managed to snap its 9-day winning streak. Powell saying that rates might not be high enough yet, so indicating that there could be further price hikes in the offing, and that's clearly not gone down well with the street. So weak handover this time around. Seems like today could be a red day.
Aisha, first let's look at the primary trend. The primary trend is that markets are going up, and they're going up more, and they're going less. They're going down less. That's the primary trend. Within that, you may have a day off. Within that, you may have a little bit of twist and turn here or there. But this screen, I think, just captures everything. Bond yields were at 5. They've come down to 4.6. The dollar index was threatening to go above 107, 108. It is now directionally going lower, and VIX, which had almost gone to 20, seems to be coming back. Flip it around with crude, which for me I think is the most important indicator. Because right now there are three factors which are at play. First, geopolitical tensions are not over. Second, winter is approaching, which is historically the furnace oil demand, and the winter heating demand tends to move higher in winter months. And third, oil producers are cutting production to maintain the market balance. Now, despite that, that's a global market for you guys. Let's go back to crude. Despite that, if oil prices have plummeted from 96 to sub 80 and now just in and around 80, that is a clear indication of the market messaging in terms of where the demand for commodities and especially demand for energy is likely to move. So I think there is more positive than negative. The market has delighted and surprised everybody. And this week also, the small cap index not only made a new all-time high, it is up another 2%. So my limited point is, where is the correction? Or there was a correction. Typical bull market action, sharp, swift. Before you realize it, it's over.